financial statements. And now today we are going to see how can we use these financial statements in expressing an idea about the way the business is operating, the firm is operating. That means performance. What do you mean by performance? How do you feel? So then that is so that normally so far that this performance of non-financial side has not been that much discussed. That's why. So actually even that is very important. My suggestion is now when you are assessing performance, there are two sides, especially non-financial, two sides. One is input performance, other one is output performance. I hope you may take down if you want. Maybe they may be useful. That's why not for examinations, your personal life. Input performance and output performance. Input performance means the measures you have taken. That is also performance, right? Say for example, employee training. Employee training is something you have attempted to improve the efficiency of employees, to improve performance of employees. Then employee training, how much you have spent on training, how many number of sessions you have organized, training sessions, right? What action you have taken to improve the employee satisfaction. Then they are input performance, right? Output performance means what has been achieved, right? How far the efficiency of employees have been improved. How far the employee satisfaction has been improved, right? How far the market share has been improved, that is output performance. Of the same input performance is how far you have spent in market promotion. So input performance. Output performance is how far you have achieved the growth of market share. Like that, even that is applicable to even a bank or any different, any hotel or a hospital or a trading organization or a manufacturing, whatever it. Especially when you come to the environmental side. Environmental side, you can't measure output performance. You can't measure how much to what extent the environment has been improved. You don't know, right? So that in that area, you can measure performance only input side. What action you have taken? What action you have taken to purify the wastewater? What action you have taken to improve the carbon footprint? Right. So then, input performance only we can see. So then that understanding also very important when you talk about the performance of an organization. I think now you maybe should be sensible in performance measurement. So that is performance. Okay. Any question, please ask. I like discussion, but up to you. If you have anything, please ask. How do you differentiate financial performance from non-financial? Explain. How do you assess the importance of non-financial performance in relation to financial? That is also a very important point. How do you assess the importance of non-financial over financial? Can anyone say? Just in comment, just the general thinking. Do you feel anything? I think the one who I think responded, I didn't see the name. Was it Taridu? Oh,
yes.
yeah. Taridu, then, or maybe you can ask, if you responded, we can ask somebody else. Shanika or Shanil or Tirini, anybody? Anyone? Oh, even Taridu? Any idea about the importance of non-financial over financial?
I'm not quite sure how to measure the non-financial performance, so that's why I remain silent.
Measure, because there's a different measures available. Say, for example,
ratio is one of that, right?
Sorry.
Staff turnover ratio.
Yes, staff turnover. Yes, of course. Yes, very good. Yes, staff turnover ratio. Absenteeism improvement. Absenteeism, simply customer satisfaction. Through a survey, you can conduct customer satisfaction through survey, or maybe there are some other techniques. In organizations, when you are dealing with customers, you can ask them to rank. In banks, we can see rank their satisfaction. So that can be collected and expressed. This number of percentage of customers are very happy about the service. Something like that. Then that is customer satisfaction. Maybe customer retention, right? Customer retention, customer age analysis, right? What is the number of years the customers are dealing with, right? So then that indicates how far customers remain with us. How far we have been able to retain our customers, right? Is it okay, Taridu? Clear?
Yes. Thank you.
Yeah. So then what is the importance of non-financial performance or financial? That's my question. Anyone having any idea? Say now you take the market share, market promotion. The company has spent huge money on market promotion. The amount of funds invested in market promotion is a performance. Is it an input performance or output performance?
Amount spent is an input performance.
Input performance, yes. It's an input performance. then what would have been the output performance from the same?
Ideally, the market share should have been improved. The customer base should have been
Yes.
improved. In turn,
Yes.
the profits or
Then what is the result?
increase the
Profits and
market
revenue.
Revenue.
share.
Yeah. If you take, yes, I think you can say increase market share. Ultimately, that is also non-financial. When you spend
Yes.
on
Promotion.
promotion, that is financial. Then the improvement in the market share is non-financial. Then the improvement in the market share is resulting
Profits increase.
revenue. It is financial, right? So
Yes.
you are improving employee performance. You are taking action to improve employee performance. Is it it is non-financial, improved employee performance. What is the output? What is the result?
Increase the customer satisfaction.
Increase in the customer satisfaction one way. On the other hand, then improved customer satisfaction, employee performance can result in improved customer satisfaction. On the other hand, improved goodwill. Okay, another improvement.
Increased efficiency in whatever the activities of the staff. Yeah.
Yes, work efficiency, improved efficiency result in what at the end?
Ultimately to increase in revenue and profits.
Yes, profit, because our labor cost, we may achieve less labor cost for the work.
Yes.
So ultimately, it is resulting in money. Even on the other hand, when the employee performance is enhanced, then that will result in, if you say it is resulting in improvement in the customer satisfaction or the goodwill, what is the final result?
Increase in revenue.
Increase in revenue. So then what can we say? What is the relationship? Always improvement in non-financial performance will result in improvement in financial. At the end, all will come in financial performance. And that's why that is something neglected area. Many organizations are not paying attention on input side or the non-financial side. But non-financial performance always lead to financial performance. So then that is very important. Therefore, nowadays, people are very much very much concerned, very much interested in improving non-financial side, because non-financial side always result in financial side. But if you try to improve, if you focus on improving financial side, it's difficult. You can't improve simply revenue. To improve revenue, you have to improve non-financial side. That is the cause behind it. Revenue is financial is only result. Cause is non-financial. That is very important. Okay, so today we are learning financial performance. Then after that, but unfortunately we don't have time to discuss non-financial side. But you should be able to address how can we go for improvements in these financial performance through non-financial. Because the means of getting these financial performance improved is non-financial. Right? So that is also another fact. Yeah, if you have any different idea, please you can. Don't believe me. What are the tools available to measure financial performance? That's what we are going to discuss. What are the tools? What are the major decision areas influencing the financial performance of a business organization? Different areas. We discussed there are how many decision areas basically generic in a business. Do you remember? Is it? These are the decision areas. What are they?
Operating
decisions.
Financing and investing decisions.
This area?
Financing?
This is investing.
Investing.
Yeah, this is financing.
Let's see.
Financing decision. So therefore, what are the major decision areas influence financial performance? These are the three areas: operating decisions, investing decisions, financing decisions. Then when we measure financial performance, what are the areas of performance? Performance in operations decisions, performance in investing decisions, performance in financing decisions. Actually, these are not in textbooks. These are just my explanations based on different perspective, right? So you can see. So because why I said so was that sometimes just I will go through a textbook and you may just keep aside. But this is not found from any textbook. But these are based on facts, just not arbitrary ideas from a different perspective. So I have not seen this classification, but anyway, this is not a big thing, right? This is natural. You can see, no one can challenge. This is happening. There are operating decisions, investing decisions, financial decisions. Therefore, we can identify performance into operations, financing, and investing. But why I say now in textbooks, this performance of financial performance, we identify into classification like profitability, liquidity, solvency, like that. So that is okay. That is another way. But I'm putting in a different way. So I like you to learn something new. Therefore, I like if you can think again in a different way, rather than just continuing the same what we have learned in the past. So here it says the success of creating financial value for a given period is the performance. At the end, financial performance means how much of financial wealth has been added. So we call it financial value creation for a given period. Then the financial value comes from financial results or financial outcomes. Financial outcomes are measurable in monetary terms. So financial outcomes appear as profit or loss and the capacity to generate cash flow. Capacity to generate cash flow. At the end, capacity of the enterprise to generate cash flow is the result. Profit or loss depends on the performance in managing revenue and cost. Managing revenue creates the degree of efficiency in utilizing given capacity at the end, non-financial, resulting in financial. Yep. Managing revenue. Various action. Tools. There are some tools available. One is relative improvement. Relative improvement is the comparison of current year performance with the last year or with any base year. Less base year means if you have taken any re-engineering effort, maybe in 2020 or 2020, right? This is a landmark change in your business. So in 2023, you are comparing 2023 with the 2020. That is relative performance. Or maybe simply you are comparing 2023 with 2022. So with this year, relative improvement. This is also called horizontal analysis. Right? Horizontal analysis. So horizontal analysis is one tool. Second tool is trend analysis. Trend is when you are comparing current year performance with several past years. Right? 3-4 past years. Let's say 2022, 21, 20, 19. So that indicates the journey of the business. Like this. Trend. So the trend, so year 1, 2, 3, 4, like that. So when you say that way, from year 3 to year 4, maybe a huge growth. But in the year 5, huge fall. But even though there's a fall in the year 5, but we know we are in an increasing trend. Therefore, trend is very important. Horizontal improvement, horizontal performance gives an idea about how are we doing compared to last year. But that may not provide a real guidance to the decision, because compared to last year, there can be an improvement or decline. But that decline may be like a cyclical. It is natural. But that decline can cause another improvement next year. Therefore, we have to see where we are, how are we moving on. Okay, so good idea, I think. Trend analysis. So you should be able to understand what is the difference between horizontal and trend. Can anyone tell me the difference? Kumuduni. Difference between horizontal analysis and trend analysis. Okay, Kumuduni is not responding. No problem. Niraj. Okay,
Yeah.
Yeah.
Trend analysis is a historical performance of the company. I mean, the comparing current performance against the historical performance of the company.
Historical means how many period?
A period of 3 to 5 years.
We can say more than 2 years.
Yeah. Okay.
More than last year. More than 1 year past.
Yeah.
Even up to 10 years, maybe 100 years, no problem.
Okay.
Yeah. Not treated. Okay, very good. Yes. Okay. Horizontal?
Horizontal would be, I have not come across that, but I think horizontal would be
I explain.
comparing with peer companies.
No.
Previous year.
Exactly, yes. 1 year. Last year. I just explained. Last year. Horizontal is comparing with the last year. Yeah. And trend is comparing with more than 1 year in the past. Common size statement. Common size statement is expressing different elements of the income statement or the statement of financial position in a common scale. Like it is, I think, it's like a pie chart. Say if you take, okay, this is the total revenue. This is a revenue is 100%. Total, out of which how much would be the cost of sales? Cost of sales. So it out of revenue, it could be 70%. Then 70%. Then how much would be the gross profit? Gross profit is 30%. Gross profit. Then again, gross profit, we may see certain amount other income and expenditure. I think it didn't come properly. I can show you. If you express total revenue is 100%, then all the elements in the list, because in the income statement, everything is coming out of the revenue, then cost of sales, then gross profit, Then out of gross profit, we can say other income. Other income may be 2%. Maybe sales expenditure may be 10%. Administrative may be 20%. Like that. So compared to our total, how much is the proportion of each, and what is the amount of tax, income tax? How much is the remaining amount? Let's say remaining profit for the year, maybe 2%. It gives an idea, okay, from every 100, we will retain at the end only 2%. All 98 goes away for different purposes. Either maybe expenditure or maybe taxes, income tax, for whatever it. Expenditure and income tax, cost of sales. All others are going out. Remaining is only 2%. Like that. Or somebody can ask, okay, out of revenue, how much is the income tax? That can also, we can say, when our revenue is this much, our income tax is 3% or 1.5%, like that. So it gives an idea about how are we doing. So common size statement, we call it. Even that's why when you take revenue, even pie chart also can be taken as a kind of a common size. Revenue can be analyzed from various sources. Total revenue from which sources we can get. The whole thing can be analyzed. Then ratio analysis we are going to do. I'll explain there, and cash flow analysis. Right. So first of all, we have to have a overall idea. Then only we can what we discuss is understandable. So horizontal analysis, how to do that? I will do it through an example. How to work out. But anyway, this horizontal analysis, normally we can see in organizations, in their financial statements. See now, this is Demo PLC in 2017, just because actually I had downloaded. So I'm continuing same thing, even though if we take the 2023 statement, it's same. So here we can say in the same structure. So in the company and group, I think I explained the difference between group and company. Yeah, the company, see now, this is horizontal analysis. Our revenue has declined by 15% by 2019 against the 2020. Sorry, by 2020 against the 2019. There's a decline, 15% decline, and cost of sales has declined by 38%. And we can see what it is, 49% improvement in operating income. Operating income significantly has been improved. 32% increase. There's an improvement, 32%. What is that? Impairment. Trade is uncertain, like doubtful, including like doubtful debts, impairment of provision for impairment of receivables. What is the 30% improvement? You can check. Operating profit. That's good. At the end, we have been able to improve our profit, operating profit by 31%. That's good. Then that way we can assess performance of the organization, company, comparing with the last year. This is a relative improvement to horizontal analysis. Normally, horizontal analysis is provided in some financial statements. It's not a mandatory. Therefore, some companies may not provide. But some companies, I think it is not mandatory. I'm not sure because I'm not that much in touch with latest developments in accounting standards because I'm not in that area. I think there are accountants. But anyway, if you find it in financial statements, that is a horizontal analysis. So trend analysis is this. Examples. These are trends. Common size statement like this. See, out of revenue, when you take revenue as 100, these are in the income statement all are components of revenue, coming out of revenue. So how much is the tax? How much of the net revenue? This tax is like VAT. This is VAT, sales tax. Other income, right? Say income tax, it appears as 2.5%. So that gives an idea that out of the revenue we generate, we are paying to the government 2.5%. That is not the tax rate, but from our revenue, this much is going out. Like that. That gives an idea about how are we doing with our revenue. So another example, as I said, like a pie chart. Right. Ratio analysis. Now, before coming to ratio analysis, we can exemplify using data. I hope I think I attached. I shared this data with you. Did I? Didn't I? Anybody?
Yes, it is in LMS.
Yes, it is LMS. Yes. Thanks. That's it. Right. I got it. Now, okay. Have you got the same data set with you now? Okay, or maybe you looking at the screen, can you do the answering in a sheet of paper by you, just rather than just watching this? Are you ready? Are you ready?
Yes, sir.
All right. Okay. Now we are going to do a the horizontal analysis. I just missed it. Yes, it's there. Now can you see the screen with this data sheet?
Yes, sir, we can.
Yeah. Okay. Horizontal analysis. I will tell you how to calculate, do this. In the horizontal analysis, now we are doing in 2022, right? For the year 2022. How do we do? We take always current year, right? Current year performance minus past year. Right? Because then that's why when in that way, when there's an improvement, that will result in a positive figure. Ne? So always in the how to calculate the horizontal analysis, we take the current year performance minus last year over last year. We are comparing with the past year. Okay. Current year minus past year over past year. As a percentage, we can see 20.6. So we can just drag it for the items. So that will come. So that should be interpreted as I said before. Should be clear. So I will erase it. Should I? Is it okay?
Got it.
Yeah. Finished. Now trend analysis. Analysis. Trend analysis. For the trend analysis, we take the data required for the trend. Let's say first we can take last year's. Then we can take the items, revenue. Like this. Now what we can simply, I think you may or know sometimes, we just select the data in Excel and we can go to draw. I don't know. Home, insert. Insert. Here we can see graph. Line graph. Line graph. Yeah. Simply. Revenue results in, you can improve this graph. I think with the Excel, you can see from 2016, there's an upward, it has come up and it has very little declined by 18, but from 18 up to 2021, there's a drastic decline. But anyway, we can see the company is recovering in 2022. So then that gives a picture of the journey of the company in the revenue. Similarly, you can have revenue and maybe other expenditure, revenue and the profit. Then that will give a comparison of the results. So you can have other comparative data as well, like say profit. What is the revenue behavior? How the profit has responded, like that. That is trend analysis. I hope you got the idea. Then,
Yes.
sorry? Yeah. There's also to understand the trend, there's another way, that is percentage analysis. It's a very important for you, being a manager, how to use a percentage analysis. In percentage analysis, we take first year as 100 in the trend. We see what happened to the 100 over the years. And how to do that? We take, if the first year is 100, we can take what is next year. Next year is, we take that first year 100 as the ratio. So we can say 100 over 35,194 this year. So we have made first year as 100. Therefore, that is the ratio. Then accordingly, we multiply other year. Then what is this? And similarly we can do for all. When you come this year, it is about, if first year is 100, what is M3? This one, N3, like that. What is O3? Taking this relationship, that's very important. But the mistake you are making is, you are always, when you take, okay, from here to here 100, what is the percentage? From here to here to here, then it is not the trend. I have seen this mistake sometimes we make. So we have take from 100, how it has improved. So a similar trend we could see, from 100 to 17, there's a drastic improvement and slight decline, then drastic decline up to 2021, then the improvement in 2022. Same thing as we could see from the graphical way. Should be clear. Right? Then common size statement. Is also called vertical analysis. total 100. Total 100. If total is 100, cost of sale this much. How about? So what we do similarly as trend, as a percentage of the first one. Therefore, we can have first one as a ratio, 100 over 30,087. And with that, we multiply this year, this element. Oh, yes, then why? Because here this line has been formatted to percentage. That's why. So I have to delete these zeros. Then it is 72%. It's 27. Profit is 27%. Even the other income is 1.7%. We can say financial cost. Financial cost is 7.6% of revenue. Profit is 1.9%. That means out of the 100 anyway, what is remaining is 1.9. Rest, that is 98.1%, is going out for various purposes. Okay. Any idea? Any question? Please ask. Right. That's all. Then we are moving on to ratios. So I'm trying to finish my sessions. I don't think it is possible this week, but if it is possible, very much nice. Otherwise, anyway, I'm finishing next week. Now, what is left is ratio analysis. Ratio analysis. Ratio is a comparison between two figures. I think they are given. It doesn't matter. Ratios can be expressed as a ratio. Like, let's say, for example, we can say revenue and profit, gross profit. That is margin. Profit margin. Say gross profit is 2,500 million for a period, for a sale of 10,000. Let me format this. Go format number. No decimals. So when is 10,000? 10,000. For 10,000 sale, we have a 2,500. So this now we can express this as a ratio. As a there are different formats. Forms of ratio. Forms of presenting ratios. One as a percentage. As a percentage, we can form it. 20,000 divided by 10,000. As a percentage, so we can, to express as a percentage, we can format this. Format percentage. 2 decimals. Yeah, 25%. As a pure ratio. As a pure ratio is 144. For every 4, there is a 1 profit, 1 element. Or as a fraction. As a fraction, 25,000 is 1/4. We have to reformat it. Format number. One-fourth. Right, it gives the answer. 1/4. Right, as a fraction. As in times. In times, we can say gross profit is point 0.25%. 0.25 times. That is when 1 is divided, 2,500 divided by 10,000, it is 0.25 times. So these all are correct. But which one is more convenient to express the margin of sales? What is your idea? When you say your gross profit margin is 1:4, is it convenient? Or 25% is convenient? Or 1/4 is convenient? Or 0.25 times is convenient?
Percentage looks more convenient, sir.
Yeah, that's right. Yeah, when you feel, okay, that will better communicate, use that. That's the thing. Therefore, ratios are available. We use the form as we judge on the potential of the communication. So sometimes we can ask how many what is your revenue compared to your asset? We have assets 10,000. We have revenue 50,000. So value of our vehicles 10,000. We have 10,000 vehicles values. Created 50,000 sale. We ask how far you have used your vehicles to make the revenue. What would be your answer? My question is, as a manager, we can ask, okay, how far we have used, from the direct board they can ask, how far we have used our fleet of vehicles, delivery vehicles, in creating revenue. Then you assess, okay, our vehicle, we have 10,000 million, 10,000, whatever the measure, dollars or whatever, rupees worth of revenue, or maybe in thousands revenue, vehicles, and we have generated 50,000 against as a performance. Then how can we express this? Can anyone say?
5 times.
Very
Yes.
good. Yeah, 5 times. That will communicate. How we have generated 5 times of our. So they are not the percentage. As a percentage, we can say 500%. But 500% doesn't communicate well. 5 times will better communicate. We have created 5 times of vehicles value. Yeah, so then so that's how we decide the form of the ratio. I think now it should be okay. Yeah. Then again, let's say operating profit ratio. You have operating profit ratio for a year, this year 2022. That means your operating profit compared to revenue, whatever, let's say later, any ratio is 18%. Now, what is the idea? Is it enough, adequate or not? Can anyone say? How can we interpret the performance? Operating profit ratio is 18%.
We'll have to have another set of data, I mean, at least to compare with, sir, to see whether it's improved
Example.
or not. If we have another, data for 2021 or something, then we can compare with that. Now, since this is the only
2021,
yeah,
it is 15%.
Now Now it's comparatively improved.
Improved, yes, that's right. So that's very good. Yes, that's why ratios cannot be used for decisions, or ratios are not useful in decisions without any comparison. So only when you can compare, you can make an idea. So your comparison could be either with the past or something like we call it then inter-firm comparison or intra-firm comparison. Inter-firm or intra-firm. Inter-firm means you are comparing with competitors. You are comparing with industry, general industry. Intra-firm means you are comparing with past year, past period. You are comparing with your plans, your budget. You plan this much, achieve this much. You are comparing with other sections of the business. That's also internal comparison. You are comparing hardware section with textile division or furniture division of a firm, other sections. In the past, or with the plans with other division like that. So interfirm and intrafirm comparison. This is called intrafirm comparison. Okay, should be clear. Right. Now we are going to analyze ratios. Then ratios can be used to analyze performance in different areas. I said, because in your past studies, you may have learned definitely profitability, liquidity, like that. But I'm putting in a different way. Same thing. So what are my way of classifying performance? As we discussed, performance in, yeah. Somebody tried to say something. But it's the way we are going to look at. I explained it.
Performance activities, financing and operations activities, financing activities,
operating decisions, financing decisions,
investing decisions.
investment decisions.
Yes, that way we can. That gives us a better, I think, because why I'm doing so. That gives our various areas, because profitability, liquidity, etc., they are, we don't know which areas, but operating is one area of the business, and financing another side, and investing another side. Investing indicates asset usage. So mainly, many things are coming within our operations. So operating decisions, how successful our operating decisions are. That's why we can use that way. Operating results of performance in operating decisions. Performance in operating decisions. Actually, why I am doing so? Because we have a fear of changing. Then that's why we always try to take things as given. That is what is happening. Even accountants, normally, my experience is they don't change. Always everybody is continuing with what they have learned. My view is that no, that's how other countries are not doing that. They are changing. For example, they are accountants. Any accountant? Can I have any accountant? Shanika, are you an accountant? I like, Yati, you to respond because if you don't like, I can just continue. Nobody is responding.
think most of us are related to finance and banking, right? Batch.
Yes. Banking and finance. That means accounting, ne? You mean that's what you try to say?
Uh,
No, just I'm asking. Simple.
yeah, to be honest, I don't have an accounting background, sir. Just here and there, like when in banking exams and all, small parts I've
Idea, ne?
touched that.
Yeah, it's okay. Yeah, it's okay. No problem. Thank you very much for actually responding. That is that is the most important thing. Responding. We should be able to talk openly. I like it actually. That's why we hate nowadays online, because we can't use this facility. Our behaviors do not support, because when we talk, people keep silent. Many. It's really annoying. But thank you very much. I think was it who responded? Saridu?
Saridu, yes, sir.
Yeah. Thanks, Saridu. Thanks.
Thank
It's a big courage. Otherwise, actually, we get little bit, in the morning, early morning, we get little bit displeasure.
Yes, I can understand.
Yeah, because I can't do anything. When you keep quiet, it's really, really difficult for us. But many don't understand it. Right. Thanks, Tarindu. Anyway, so what I tried to say was that still we believe on direct material cost as cost element, direct labor cost and overhead, like that. This is the classification. Many situations we adopt. This is how we learn still in our professional examinations also. Sometimes we learn like this. Sometimes, I don't know. But let's say Japanese, they say no, direct labor is not direct. They reject it. Japanese say material cost. And they say all are same. They are not direct. They are for conversion cost. Like that. So that way, I think just I tried to say, we should be able to think what we learn and change. Just an idea. Simply asking, even don't believe me. Right. Okay. Now, performance in operating decisions. So I'm just doing, it is free for anybody to talk. So I don't know whether you understand. I hope you understand. Harindu, if you have any question, please don't hesitate. Please ask, okay?
Okay, sir. Thank you.
Yeah, thanks. And performance in operating decisions. One major area in assessing our operations is revenue. That is also not in textbooks, but practically. You go and ask any director of a company, but the most important is revenue. They are talking about what has happened to our revenue, because revenue is a source for profit. So our the survival depends on our revenue, a business organization. So revenue performance. Revenue performance. Revenue performance, we should be able to assess in different way. One is revenue trend. Trend of revenue. Right? Trend of revenue, we have already done it. So I'm not going to. Is it okay, Tarindu? I'm not going. Yes, you remember. It's a waste of time. Trend of revenue is one. You can see how the 100 has become. I remember 100 became 117. No, 118. 117, and it came down to 115, and like after that it came down, declined sharply, right? Like that. That is the trend of revenue. Then also relative improvement of revenue, we can see. For the year 2022, we can say the most recent period, we said relative improvement. Like that. So 20.5% improvement, like that. Trend of revenue, also revenue efficiency. Revenue efficiency means there we can compare the revenue with expenditure we have incurred to make the revenue. What are the expenditure we are making? Are maybe sales and distribution expenses. One is, or maybe administrative expenses. Yeah. So sales and distribution expenses over revenue, we can say. Administrative expenses over revenue as a percentage. That also gives an idea how much of revenue we have spent for this. Let's look at, we take the sales and distribution expenditure. Here, sales and distribution divided by revenue. This. We take for the whole period and format percentage. Let's say 1 decimal. So to 2.8, 2.3, 2.2, 1.8, 2.1, 2.5, 1.7. So very small percentage they are spending on sales and distribution. How about, let's see, administrative, admin over revenue. As a percentage. 1 decimal. See, 10%, 10%, 10%, 12%, 14%, 17%, 17%. So that this may be a result, this rather than improvement in revenue, administrative, this may be reflecting the decline in revenue, but the administrative they can't reduce.
It's not easy to reduce administrative.
Admin, exactly. Yeah, that's the reason. Yes. Yes. Therefore, as a result, what has happened, it has become a major portion, major portion of revenue. It has, as a portion, it has gone up when the revenue comes down. Yes, as you rightly said, yes. So then, what we can say is that the effort the company is making in the sales and distribution is little less. They are not spending that much. They are not spending in market promotion. They are not spending in advertising. That may be the result why they may be declining in the market. Or sometimes maybe it could be the reason that in that trade, the trade has changed because they were mainly in the was mainly in the automobile business. And during the past period, after 2019, the automobile business was hit by this foreign exchange problem. Therefore, they have given up.
Import restrictions are also imposed.
Yes, that's right. Yeah, even starting from this bomb attack, Easter bomb. That could be the result. So anyway, for any reason, it seems that they are not making any effort. Even actually, it says same in 2016. We didn't have any bomb attack, but they still, we can see they had reduced. When they had been in peak by 17, but they had spent only 2%. So that indicates they are not that much interested in promoting their products. That's such an idea. So on that basis, we can assess their performance. We can ask, we can see whether it is right. Right. So then that's how we can interpret. Rather than, I think, please keep in mind when you are going to interpret, don't say it's an improvement or decline. That doesn't mean give any meaning. When it's improvement or decline, anyone can say. But we must be able to tell something meaningful. Therefore, this indicates the interest in improving the market seems to be less. That's what we can say. They are spending just very small percentage of revenue for the sales and distribution purpose. So we have to see what is actually happening. Right. So then administrative we can't come in because that is a level they are making. As you said, yes, simply they can't reduce administrative staff. But now, as a result of decline in the revenue, as a percentage, it goes above. Right, goes up. Right. So administrative expenses like that, revenue efficiencies, trend of revenue. So those are the areas where we can assess our revenue performance. Then the profit performance. Profit performance we can assess into different elements. Gross profit or gross profit margin, operating margin, profit margin, net profit margin, return on investment. So these are the different profit elements of a business. Indicators, profit indicators. Gross profit, operating profit, net profit, return on. Gross profit means the margin contained in the sales revenue. When you are making a revenue sale, how much of a profit is contained? I'm not going to explain because I explained this gross profit in the previous session. Operating profit is about all together in that operating decisions. As a result of operating decisions, what is the result? So result from operating decisions is the operating profit margin. Right? Net profit margin is the profit remaining for shareholders. What is the profit remaining for shareholders? Somehow, at the end of everything. Return on investment means comparison of the profit with the investment in the business. So this is how we should understand. Now let's take one by one. Profit, we can say even profitability. Profitability performance. Profitability performance. Profitability means the difference between profit and profitability. Profit is the result for a particular period, excess of wealth created, excess of revenue created. Profitability is the potential of making profits over the period, over few periods. How in different periods, how are we making profits? That is profitability. Therefore, performance means basically profitability. That can be measured through gross margin. Gross margin. Gross margin. How to calculate gross profit divided by revenue. Gross profit over revenue. We take gross profit over revenue. Right. Gross profit over revenue. So, Tarindu,
Yes, sir.
how would you explain this performance?
From 2016 to 2018, the gross profit percentages were gradually reduced. And from there onwards, if we take the base as 2018, it kept on increasing by quite some around say 2% in the first year, and another 4%, nearly 3.5% on the second year. Likewise, it has been gradually increasing.
Yes. Anybody else who can say anything? Okay, no, others are not responding. Actually, I'm really unhappy, right? I'm really unhappy about matured people. How do you behave? It's very bad early in the morning. Thank you, Tarindu. Yes, because it's very bad. I think because there are accountants and you can exchange your views. But your responding is when you are keeping quiet is not. Don't think it's a good thing. As matured people, as experienced, as managers, as respectable people, it's not a good behavior to be accepted. Okay, I'm not happy. Right. So we have to respect people. I think. That's why talking is a way of responding, respecting. Right. It's really difficult to continue. Now, anyway, Tarindu,
Yes.
this is how many say performance. But at the examination, even I don't like, I think that way when you express, no marks will be given.
Okay.
Yes?
Okay.
Yes. Because anyone can explain like that. Looking at figures, you can see it's a decrease or increase.
Yes.
Yeah, but not that. We have to signify what is happening. So what I explained gross profit. Now, Tarindu, do you remember? I explained gross profit. Is it under control or out of control? Basically, of managers. So managers have totally their control, or do they have little control over gross profit?
Gross profit
Under control.
Under
yes.
control.
Under control.
That means
they have little control over that, right?
Sorry?
Little
They have
control.
little control over that.
Little control. I think I explained it. I said that gross profit comes from revenue minus cost of sales.
Sales.
How revenue comes?
Sales.
Sales, that is quantity. Ne? Quantity into price. Quantity to price. So quantity means demand ne? In the market. And price. Then gross profit, cost of sales. Cost of sales comes from price and other rates like custom duties, etc., or carriage shipping charges like that, and volume. So volume, I think here no, not relevant because the same volume we take. Say demand. Demand, is it under control or out of control? Market
Not
demand.
in control of the managers.
Sorry?
Demand is not under the control of
Not
the
under
managers.
control. Not under control. Price.
Price is also like it depends on the market forces.
Market, not under control. You have to go with the market, not whether we like or not. Then from cost side, supply side, prices
Not under control.
not under control. So volume is whatever the volume we are selling. So volume we don't have to assess. Then therefore, accordingly, these are the determinants of our gross profit. Then all are given by the market, industry. So gross profit is the rate given by the industry. That's how we should know. Gross profit is given by the industry. Right? So given by the industry. So that's why normally in hotels, I said somewhere around 65 to 75%. No hotel can operate with very, very specifically like what 15% gross profit. Then it is something very, very abnormal. In retail, these are the normally very clearly different industries having kind of a ratio. Retails like supermarkets around 6 to 8%. Like that. So depending on the business you are in, you will be getting a certain gross profit ratio. Right. Now, what can we say about the demo? How can we interpret? Looking at 26 to 19, we can see a kind of a range. In this range, what is the ratio normally? Around 15 to
18.
18.
Yeah.
15 to 18. When you take second set, it is from
21 to 28.
21 to
28.
27. 21 to 23, we can see even because there's a drastic improvement. And here 27. Then how can we express this? We have when we as analyst perform, we can say this is one business they had been operating in. Right? Where they had been earning 50 to 18% margin. That is the normal automobile business. Automobile and other automobile related services they provided. Demo. They were specializing on that. So then that business gave them 15 to 18%. Then normally if the organization wants to make a change in the margin, they have to make the change in the business. So this indicates that they have changed their business from these in these two periods, this much, one range. So they had changed their business. Actually, it is right because once when I was explaining, one from the demo was there, fortunately, one lady, one girl, she said, is it right? They changed their business from automobile to fertilizer during this. And again, 22, they might have made another big change in the business by 2022. Or maybe they might have found some kind of a big change, maybe like import duties or something, or maybe actually here, 2022, what has happened, we could see in general, everybody had increased their prices drastically, abnormally. We experienced in our inflation went up to 70%. So this could be a result of abnormal increase in the market prices. Everybody somehow, I don't criticize, but we could see all the prices, even cement prices, went 3 times up. So this could be some such a result. Therefore, it may not be the same trade, but it's a drastic abnormal change. So then that's why that is how we can assess gross profit. So they have been they had been making a margin of 15 to 18%. So they in that business, seemingly they have changed their business. So in analyzing performance, what kind of a change? Have you made any change? And we can ask, okay, if not, how have you made this change in the gross margin? So that we need answer. So therefore here we can say they have changed their business from automobile to what is here?
Fertilizer.
Fertilizer. Yeah. So this 2022, they may be special. I don't think they have again changed their business, but fertilizer, their abnormal price increases should be there. As a result, their margin must have gone abnormally up this period. So
Just a small question, sir.
yeah,
Like if we don't have any inside information or better understanding of how the business model works on such an organization in case of demo in this case, like but by just looking at the financials, is it possible for us to identify that they have shifted their business focus into from automobiles to fertilizers or any other phase of the business?
Yeah, is Tarinduri?
Yes.
Yeah, Tarinduri, that's a very good question. Yes, that's why now when you assess performance, now Sarindu, as I think at the very beginning you said like improve, increase or decrease, that
Yes.
they do not lead us to ask these questions.
Yes.
But when we analyze, okay, then it gives us a kind of a question. Oh, why is this change?
Yes.
Simply rather than saying, oh, it's good, you can say, okay, why this has changed? Then you have to find an answer. Right?
Yeah.
You have to find an answer. Maybe you may explore. Actually, that's why annual report is given. When you identify this kind of a change, you go explore in the annual report. Right?
Yeah. And then we'll have to dig the reasons up from the report, the document.
Exactly, yes, that's why. Then it will drive you to read the annual report. To see whether now what are you reading? You are reading whether they have made any change in their business. What kind of business they have changed? Why they have changed it? Is any explanation? Yeah.
Yes. Because like the improvement is like a significant, drastic improvement, like nearly 4% improvement from 2019 to 20. So then we'll have to dig deep and find out the reasons. No.
Yes, that's right. Even you have to ask question, okay, how have you made this much of an improvement?
Like within a course of 1 year, yeah.
Yeah. You can say actually our when we analyze annual reports, every company's margin has gone up drastically.
Okay.
So that indicates how they have increased their prices. Say electricity board, how increased 70% increase their prices. Now water board is also going to increase. So their revenue go up.
Yeah.
Yeah. So definitely margin will go up. It's abnormal increases. Normally in the market, it cannot happen. But during this period, it happened in Sri Lanka. So that way we can see with the taking the gross margin, you can think different things. That is your analysis of performance. Yeah. Okay, Tarik, is it clear now?
Yes, sir. Thank you.
Yeah, thanks. Okay, gross margin. I think we can go for another one. After that, I will wind up for the day. Gross margin. Second is operating profit margin. Operating profit margin. There we are comparing operating profit over revenue. Operating profit over revenue. We take operating profit over revenue. Percentage. So operating profit, how operating profit comes? We get the gross profit, then mainly we are deducting sales and the distribution expenditure and administrative expenditure. Sales and distribution expenditure, administrative expenditure, who decide?
Managers can decide.
Managers. And also it may give some kind of an impact by other income. Other income, who decide? How it comes? Other income?
Investment decisions.
No, other income, like let's say if it is a hotel, other income may be just we are selling somebody's items for commission. Commission is another income. Or we may be just investing some of our money in some shares and get a dividend, other income. Or we may be renting out a certain unused building, get a revenue, rent income, other income. Or we may...
Yes, small clarification in that part. When we are investing in something, it's not coming under the investment income or finance income?
No. That's why finance income, they are, let's say now, dividends. I mean, when you get any dividend from investments, when you invest your excess money, maybe side just for the purpose of making revenue, then that comes, dividends come as other income. But sometimes when you are keeping money in managing your treasury management, when you are keeping money in day-to-day purpose for maybe some call deposit something, you are earning interest income. That interest income becomes a financial income. Right? Yeah. Is it? Okay. Yeah. That way. So dividends you can't take as a financial income. It's a purposefully you are investing to make revenue. But the call deposits, etc., just to make use of the money in your day-to-day operations. That's how I think I understand. You can further just go through. But anyway, you can see dividend is another income. It's not taken as a financial income. Yeah. Okay. So like that. Then other income, like hiring income, commission income, rent income, dividends, any profit from sale of some unused assets, etc. How are they coming from? Managerial decisions. Then therefore, what can we say about operating profit? It is totally indicating what? indicating managerial performance. Right? This is totally indicating managerial performance. So any credit or blame should go to the management. So then we have to see how it has improved. 388, 376, 330, 313, 479, 471, 998. See, therefore, managers have been able to maintain the margin from operations and also up to 2019 until under the declining conditions, but they have been able to increase the margin from operations from 2020 and 2022, but drastically coming up 2022. Actually, my personal idea is that this increase is not really a management improvement, but any managerial decision is due to the abnormal price increases in the market. That is what I feel. I have not explored, but I'm sure because we analyzed number of companies' annual reports. Result is like that. Abnormal increases we can see. So, but anyway, it indicates better performance of management of the company. Performance, they are improving. So then that can be taken as an improvement in managerial performance in the profitability area. Net profit margin. Net profit margin is finally net profit over revenue. That indicates just how much remaining for shareholders. Finally, whatever amount available, 740 against revenue. 1.4, 0.8, 0.6, 0.9, 0.6 loss, 1.8. See, with the decline of revenue, no, anyway, even with the improvement of revenue, their net amount has come down. 2.1 to 1.4, 0.8 minus. So very much declining performance. Last result. But they have taken action. Now they are improving. 0.9 has come up, has become double. 1.8 and further gone up. 1.9. Therefore, we can say this is also managerial performance. But anyway, when you talk about the final value creation, financial value creation for shareholders by way of profit. So it has declined, but now it has started improving. Yeah. Okay. So I think then what is left is return on investment. There we need to spend some time because there's a deep analysis. It's a very useful analysis we are going to use, but now we have no time. So I'm going to wind up at this point. If you have any question, finally, normally you are not asking questions. I think anyway at the last moment I found some responses were coming out. That's very good sign. If you have anything, please ask. Tarad, everything is okay?
Yes, up to now, today's lesson is all right. Thank you.
All right. Okay, since no other questions, they will have to leave for another lecture to the university. Okay, thanks. Have a nice day.
Have a nice day, you too.
Thank you, sir.
Thank you.
Thank you, sir.